being transparent for me is crucial, especially in our business. It's complex enough as it is, and creating this alignment in the ownership, in the perception of what we're doing would be a severe mistake. Second one is make sure you do the legwork and have that big pipeline. Thirdly, I think it's coming down to the salesmanship as well, like trying to build the momentum and understand how you create that momentum in the rounds. You also sell the product in efficient.
Alrighty, hello everyone, and welcome to the Deal Maker Show. So today we have a really exciting founder, a founder from Sweden, and we're going to be talking about the good stuff like the building, the scaling, the financing, how you go about building the team, trying to access capital at every stage of the way. So brace yourself for a really incredible conversation. So without further ado, let's welcome our guest today, John Diklev. Welcome to the show.
Thank you, Alejandro. Great being here. Thank you for having me.
So originally from Stockholm, from Sweden, and I know you haven't really moved much, from your specific location right now. So give us a walk through memory lane. How was life growing up for you?
I mean, Sweden is probably the best place on earth to grow up in, I would argue. Of course, a little bit biased, but born and raised in Stockholm, and I've stayed here throughout my life, and then ventured out on different adventures on the course of growing up. But I always had my base in Stockholm.
And talking about growing up, I mean, you were always a follower of your sister, same school, same everything, except for medicine.
Yeah. I mean, I think my parents had a plan for us how we should progress through life until a certain age. When she chose medicine, I chose to go into engineering instead. So I think it was both interest, but also part sort of choosing my own path that didn't align with hers.
So why engineering and physics?
I've always liked maths and physics and that sort of logical part of the world. I'm a very logically driven person. But found out that for physics, it was more math than I had braced myself for. So eventually changed my bachelor to industrial engineering and management instead.
So buying and selling stocks was also something that you started to develop quite early. How old were you when you started buying and selling stocks?
I mean, actually, I was with my wider families. My grandparents enrolled all of us in a yearly Swedish competition since I was 1 year old. So that's the first time I bought a stock. I bought a candy stock. I think my mom picked it for me, but then started pick up the actual hobby when I was about 16, and been doing it since.
And that led into a group of friends, into creating your own investment thesis. I mean, that's quite amazing.
Yeah. So, I mean, I did it just because I thought it was fun. It's a good challenge. It's like a little bit of an intelligence. Like it's like playing chess. Who's the smartest guy in the room? That's always been appealing to me.
So then, how do you all of a sudden decide that the best route to follow is venturing into the unknown, into becoming an entrepreneur? Because obviously Sweden, is quite a traditional, country. It reminds me a lot of Spain, where I'm from, and it's either you become a doctor, a lawyer, or a consulting. But becoming a founder. So tell us about that.
Yeah, I mean, I think it's partly true, but I've also heard recently that Sweden has the second highest amount of unicorns per capita
That is
outside
true.
of Silicon
That
Valley.
is true.
So we're following in the tracks of like the Spotify and Skype and the likes. But I'm coming from a family of entrepreneurs. So my parents, my grandparents have all had their own companies. So my mother actually made me promise that or at least advised me to, I would say, to not start my own thing immediately. But yeah, I didn't stay true to that. So COVID came, it was hard to find a job. So this was in 2020 when I founded a company. However, like inflation was still low, capital markets were alive and kicking. So it turned out to be easier to raise money for a startup than to find a job at that point. So that's the way we went about doing it. Yeah.
So then let's talk about that. How did the whole idea of flour come together?
Yeah, I think it's quite interesting because From an academic perspective, everyone's always known since we started talking about adding intermittent renewable power supplies to our energy system that we need to increase the amount of flexibility and storage capacity. And when I was doing my thesis, I realized that no one had actually solved that, or at a credible level were trying to solve that. So I basically took what we learned in school as sort of being true. We need to solve this problem with not knowing when the sun is shining or wind is blowing, and said, okay, someone needs to start building the solution to this. And that's where Flower, the name, comes from as well, is flexible power. So we work with flexibility in all its form to try to address that sort of underlying challenge with energy transition. How can we rely on a renewable intermittent power supply?
So, in that regard, then, tell us about the business model. How do you guys make money?
How do we make money? Yeah, that's a brilliant question. Decently complex. Once I had an investor tell me, like, John, you're running a technology company, a hedge fund, and an infrastructure company. He added also, how could I invest? And I think that's true because what we're doing is that we're connecting to different, what we call flexible assets. But that could be anything from an EV charger to a large scale battery, where we basically can control the power exchange with the energy system. And that's sort of inherently what we call flexibility, that capability to control that power exchange. What we then can do is a suite of different things. So we can do something called like ancillary services, which is basically like insurance contract to the energy system. We can do different trade types of energy trading, so buying and selling power. It could be both like arbitrage or speculative. Uh, but then what we're doing that sets us slightly apart is that we're buying something called power purchase agreements. So we'll commit to buy power from a wind farm, for example, for 7+ years, and say we will buy your volatile production. We will add our base of flexibility to this, and then we'll sell baseload power, meaning fixed volume, fixed price contracts to industries or other retailers. And in that middle, essentially what we do is that we say we will manage that intermittency. We will refine those volatile green electrons, and then we'll sell baseload power so that industries can rely on renewables plus flexibility to manage their operations and have predictability in their cost base.
What was that moment where you felt like you guys were turning a corner and you thought you were into something here?
I mean, there's been so many corners to turn along the journey. So once very early on in our journey, I told my wife, like, now we're out of the bankruptcy sort of trap. Like, we're regardless of how it goes, we're not going to go bankrupt. I'm not sure if that's entirely true, but that was a moment when we at least felt very safe. But um, I mean, one of the big things we've done is that we invested a lot into infrastructure and physical assets, being specifically batteries. Uh, we bought the biggest battery farm in Sweden, and it was basically us as a startup competing with infrastructure capital in buying that one. So we weren't the sort of favorite in that race, and we were actually kicked out of the process a couple of times. First because they didn't believe we had funding, then because our offer was too low, and we needed to secure more funding. So it was a roller coaster of being kicked out, asked to please, can we please come back in, and then eventually we got kicked out, uh, but managed to be flexible on the soft terms of the deal, I would say. So we ended up getting the battery at the end of the day, and but our financing actually sort of fell through a few weeks before we were meant to sign. So then we had to scramble to secure new financing with just a few weeks, more financing that we'd raised since the start of the company. So that was a real uphill battle. But we just said like we need to push the limit here. We need to do this. So when that ultimately fell in place, it felt like we turned the corner and like taken a significant step forward.
Because talking about financing, how much capital tool have you guys raised to date, and what has been the journey of going through the motions?
Yeah, so we raised about 57 million euros, specific number, in equity, and a similar amount, almost 60 million euros in debt, since the start of the company. And the debt is almost entirely project financing, and the equity is sort of top co level. But most of our cash we've deploy this towards assets. So we haven't burned compared to how much we raised. So since we raised almost 55 or around 55 million euros, we only burned like 6-7 million euros since the start on OPEX. So most of it's gone to actually building these assets and scaling that part of the business.
And how do you go about debt versus equity on a business like this?
Yeah, I mean, to the projects, it comes quite natural. We have like raising VC and growth capital. I mean, the expected return on that is significantly higher than the debt cost of debt we can raise. So to our project, we prefer adding debt. Um, Basically, like the banks will tap out a lot earlier than we would like them to. So we're trying to get as much as we can. Um, but at the end of the day, we're not probably today suitable to own assets for the long term. So we will also look to find joint ventures with cheaper cost of capital to build an efficient capital structure. Because I think that's coming down to a lot of the different opportunities and also challenges in the energy transition is that it's not just going to be software that plays a key role. Because in this in our space, it's so important to also now build real assets to make a real impact, and how you tie that together and position yourself as a company uh, becomes crucial. Because at the end of the day, like the capital pools aren't going to adapt to fit you. So you need to slice your risk and different risk profiles within the company to suit and serve different pools of capital. So that's something we're working quite a lot on and trying to be good at.
That's amazing. Now, when it comes to fundraising, what would you say are the top three key ingredients that you've learned that are needed to be able to be effective and successful at it?
Yeah, I think it's both like closing a round, but then also being happy with the round you closed. And if I get to tie those two together, I think being transparent for me is crucial. I think especially in our business, it's complex enough as it is, and creating this alignment in the ownership, in the perception of what we're doing, would be a severe mistake. So we've been like brutally transparent, I think, compared to what investors might be used to typically, in sort of like, this is all our challenges, this is all our problems, but here's the list. This is how we address this, and this is our plan to grow within this space and solve those problems. So that's the first one. The second one, I think, uh, more and more is like post 2020 to 23, something like that, when the inflation started kicking in. Also, like having a broad pipeline of prospects, I think, is key. Like, you're not gonna bet all your eggs in one basket. So, but that pushes sort of like it, for us at least. I mean, it's proper work to raise capital as well. It takes time just sitting through all those dialogues, and at the end of the day, you start hating your own voice essentially. But that's a part of it. You just need to do the legwork there. So that's the second thing, like brutal transparency with what you're trying to do and the problems you face. Second one is make sure you do the legwork and have that big pipeline. And then thirdly, I think it's coming down to like some salesmanship as well, like trying to build the momentum and understand how you create that momentum in the rounds. You also sell the product in an efficient way, which is obviously your shares. So those three together, I think you can raise capital in a good way and be happy with the outcome as well.
So obviously, we're talking about people here when it comes to investors, and talking about people, in this line of the conversation. What has it been to the experience of building the team, throughout the journey of the business?
Yeah, we've gone through different phases as a company in building the team. So first 2 years, we basically grew to something like 8 people. And that was it was a lot more about finding product market fit and actually getting our MVPs to be like proven. And then the second 2 years was like rapid scaling. So quite rapidly, we went from 10 people about to almost 140 people in 2 years. Um, and what we did there was that we had a very clear idea of what we were trying to build. So the first step we did was to say, okay, how do we want the organization to look in order to be able to solve all this problem we sort of see ahead of us? So we actually did an organizational chart, and then we put our 10 people across that organizational chart and just said, you are sitting on like 10 different shares simultaneously right now, just to try to make that apparent as well, and saying like, okay, we know that we're pushing you, and we need to try to find someone to shoulder your responsibilities, but at the same time also making it easier to separate responsibilities. So like having that dialogue with someone later on and saying like, hey, you're on 3 different responsibilities, the intention is that you should get to one, uh, made it less like emotional to be taken away responsibilities, because as you scale you will always find that the bandwidth of individuals will start to be maxed out, and then it's sort of my responsibility at the end of the day as a CEO to come in and start chopping up those responsibilities and saying like, hey, you have too much on your plate, I'm going to take these 2 responsibilities away from you. And at an individual level, that will always feel like a loss to some degree. But then being very clear that you have too much to do from the onset helped that progress and made it much quicker, healthier sort of journey, I think. And then it's sort of in the phase we're in right now is sort of we scaled and grew and built that company that we envisioned. Uh, but you're also quite stressed as a startup to do that, and like, have we actually like filled all the like holes in the company with the right people, with the right capacity? Are the right people in the right place? And so now we're, I think, in that sort of maturing phase where we have the body, but we need to start working out as well in order to ultimately increase productivity. So we did a quite, I mean, relatively drastic change last fall and said, okay, more people isn't going to necessarily make us more productive. It's more about how do we build processes, how do we create clear communication channels and being transparent with what's going on in order to make every individual within this piece a more productive employee at the end of the day. So that's the phase we're in now, and I think like it's quite similar to raising capital. You need to go from phase to phase, and each phase will require you to adapt and approach it with a new set of skills and a new perspective. And I think that's the trick, like to scaling successfully, is realizing that you as a company might have done the perfectly rational and successful thing the past 2 years, but now you need to drastically change because you're entered a new phase.
Now, when it comes to building a business, not only you have the uncertainty of the business itself, but on a company like this, you also have the regulatory side of things. How has it been to balance both?
Yeah. I mean, we both have the regulatory and like commodity, and there's a lot of risk moving at the same time. But we're also trying on especially on the regulatory part, we're trying to push something new. So the first thing we did was that we connected to about 1,000 EV chargers, uh, and said to the sort of system operator of the energy system, hey, we would like to be your insurance contract. So if nuclear power plants drop offline, we want to be a part of that insurance contract that would then alleviate the system from a load corresponding to the amount of production that's been lost. And of course, they were very skeptical at first. I mean, they haven't seen EV chargers do this before. And in their world, like big gas turbine or big hydropower plants are reliable. Stochastic behavior from 1,000 EV chargers aren't. We would argue, however, the opposite. Stochastic behavior from how people behave isn't unpredictable. It's quite predictable to the and having lots of small assets will actually increase your reliability than being sort of depending on one larger turbine or something like that. So, but that it took us more than half a year from sort of building our product and just sort of getting them to accept that, okay, we will actually look at this. So that was also part of that first 2 year journey, was just getting the regulatory aspects in place to say, okay, you're allowed to do what you intend to do. It wasn't a technical question really. Like we proved ourselves in all the technical like processes they set out. It became more at the end of the day, we just decided, okay, we need to become brutally transparent with them to show that we have nothing to hide, because it was more of a trust question. Are we trying to fool them in some way? It felt like. So we wrote I think it was about a 12-page document that we just called the philosophical room on EV charger, and tried to be like, this is how EV chargers work, and this is how we've approached all the different things you are worried about, and then we just send them all the data from all the chargers for like several days and said like, here, check it out. uh, and that brutal transparency, I think, helped sort of erase the trust issues, and that was sort of the key thing that changed, I think, building that trust towards regulatory service people.
Now, imagine you go to sleep tonight and you wake up in a world where the vision of Flower is fully realized. What does that world look like?
Then we will have. I mean, we both have a sovereign energy system in a European context, based on renewables, but we'll also sort of have built out a large amount of energy storage in the form of batteries, as well as making sure that our distributed assets, whether that's heat pumps, EV chargers, or larger industrial processes, are an integrated and active component in our energy system. Today, most of that are passive components where we just say, we will supply you power, you're passive, you will just consume it. And if we do that, and if we're successful in building that future, what will happen is that we will have a stable power system with really cheap prices that are, I mean, cost competitive, but also then clean. So that's what we're trying to build.
Now, imagine if I put you into a time machine and I bring you back in time, perhaps to that moment where you were thinking about starting your own business and you had the opportunity there to have a chat with your younger self and being able to give that younger John one piece of advice before launching a business. What would that be and why, given what you know now?
I would probably say no more and be like ruthless in your conviction. At the end of the day, that's what you're building. So first 2 years, I think we were also like grasping at every straw of track record in a sense, because we felt the very strong need to prove that we were making progress. That also created a lot of distractions and ultimately headaches as well, because we engaged in projects that we probably knew weren't ideal or we couldn't scale, but we wanted to get traction. Uh, so I would revisit that and just say, like, focus on the parts that you think will work, that will scale, and that's going to be part of your business in the long term. And then just execute on that.
I love it. John, for the people that are listening that would love to reach out and say hi, what is the best way for them to do so?
Yeah, I think like the easiest way is just to reach out on LinkedIn, and then I'll refer them to my email, and we'll set up a time to chat.
Amazing. Well, John, thank you so much for being on the Deal Maker Show today. It has been an absolute honor to have you with us.
Thank you, Alejandro. Thank you for great questions and a good discussion.